Today we are looking at what I believe to be the most underrated weekly paying dividend ETF. It just so happens to be a YieldMax ETF as well. So I hope you guys are excited. The ticker is ticker CHPY. We're going to dive into this fund, how I've been tracking it, and what it has been doing that is making me believe it's really, really underrated. Now, I will say these are riskier funds. YieldMax seems to have high risk associated with it, but it is an income ETF company for the most part, meaning these are just a higher risk sector. So if you know that, good. If you don't know that, do some research, not financial advice. We have a lot to cover in this video, and I'm really excited to dive into one of the funds I've been watching for quite some time now. So I hope you guys do enjoy. If you're interested in dividends, in ETFs, in making money in the stock market, you are in the right place. Don't forget to like the video and to subscribe so you never miss out on free future updates, and you'll always know what is making income investors the most money. Let's roll that intro. We have so much to cover in this video, but I want to start out with what is CHPY. So it's the YieldMax Semiconductor Portfolio Option Income ETF. And now, to give some basis for these weekly payers, because if you don't know, I track every single weekly paying dividend ETF. There are kind of different fields to it. You can have usually the lower yielders that retain more of their NAV or price over time. As in, you're not going to see the price go down typically as often. Down markets, of course, are going to drop the price, but they hold up a little better in price. And with that, you get a little bit less in payouts. So one, for example, LFGY is a very popular one that pays out huge. It pays out near 80 to 90% in a distribution rate. The caveat, it doesn't bounce back as nicely. So that is one thing I do want to point out with a lot of these ETFs. Even if you are strictly growth or strictly income-based, you can kind of flex and get a little bit of both worlds. And CHPY is one that I think is the best of both worlds. Distribution rate of 40.61%. Now, I know what you're thinking. Stop. 40% distribution rate is amazing. If you're about to click off the video, listen to me. That is phenomenal. And maybe you haven't been investing for a super long time. Maybe you have and you're just used to really high distribution rates, but that is outstanding. When I first started investing, I would invest in anything over a 10% dividend yield or distribution rate. Look how the times have changed. Now, I will say, I don't have money in CHPY outside of my YouTube accounts yet. It's still relatively new, and I want to cover more topics like CHPY and find the best weekly payers, and those are typically what I put in my Roth IRA or my retirement account. Now, there is something that's really important, but you guys have read all these YieldMax websites, all the pages. I hope if you're investing in these funds, you need to check them out. But we can see it's an actively managed ETF that seeks current income and capital appreciation via direct investments in a select portfolio of semiconductor companies. Now, I love this. It is directly invested, so they're not just doing the typical synthetic long call options that we've seen. They also have a mixed bag. They have a couple that are like this now. They have a couple that are still the traditional way, usually the monthly payers. And it's really, really interesting seeing how they compare and how they kind of fix things, like we saw with ULTY. But again, investing in this fund involves a high degree of risk due to CHPY's investment strategy. Check out all the disclaimers. Really, I promise, check it out if you're going to buy these funds. But let's check this out. We'll look at the distribution details in just a moment, but I want to point out a couple key factors. Gross expense ratio of 0.99%. It's pretty high, but it is an actively managed fund. We can see the AUM or net assets at 30.56 million. It is a popular fund. People are talking about it more and more, but let's look at what it's holding. We have Broadcom, we have NVIDIA, Qualcomm, Advanced Micro Devices or AMD. We have LAM Research Corp. I'm not familiar with that one. Taiwan Semiconductor Manufacturing, KLA, and so on and so forth. And these seem to be the biggest weightings in the portfolio. So I like that. I always recommend knowing what you're investing in. And I don't dive too far into semiconductors, but I do think as an industry, it has some really good potential. We're moving more and more towards AI, towards tech. That's how I like to invest. And I think semiconductors are the only way really to get there. So I think it is a good idea if you are wanting some semiconductor exposure, but are focusing in also on current income. When I say it's a new fund, I mean it. We have only been trading since April 3rd. Now, I know what you're looking at. You're going, wow, the fund is up 16.17%, and that is amazing. Yes, it is absolutely amazing, but we are also in one of the craziest green markets we've seen. In a red market, these things take a beating like we saw with LFGY and GPTY. LFGY didn't recover as well as GPTY because of the fact that it pays out so much more in distributions. And it's really cool when you understand that, when you learn it. It's taken me a long time to get to this point, but it's really fun watching and tracking how they perform, even in red markets. Yes, we're losing money and that's a bummer, but we are getting in some good buy opportunities, although we're in such a green market. So I shouldn't even talk about red markets. But CHPY, one thing I will note is I got a comment on my last video on the YieldMax ETFs, my weekly updates. I'll link that at the end. I do a rundown on what everything paid out, how much it paid, and basically if the dividends are going up or down. And I got a comment that these are not growth ETFs, don't call them that. And I'm not calling them growth ETFs by any means. Trust me, I'm not. They are income-focused ETFs, but you are getting some really good growth in a green market. Can you expect that in a red market? No. In a sideways market? No, because we're focusing in on income. But I do think it is important to note some of these have done well bouncing back in price. So there's a key metric involved with these income ETFs, and that is called timing the market. Can anyone time the market? No. Can people time the market even if they say they do? They definitely cannot. YouTubers cannot time the market. I mean, the only people that can really time the market are our Congress who are trading under the table. But since we don't have that opportunity, bummer for us. Now, I will say, don't just trust YouTubers who say they can do that. No one can time the market. It is all luck. And that's coming from someone that's had some of the best trades and some of the worst trades where I was just guessing. And it was just guesswork. I'm not going to take my really good trades and say that, wow, I did that on purpose. I'm not going to take my bad trades and say, oh, I was unlucky, yada, yada, yada. It's all luck. We can't time the market. But it is helpful to know if we do see a crazy drop. And if you think a market reversal is happening, check out LFGY and compare it to GPTY. And you can see some have bounced back really, really nicely. And I've watched this take place. But all in all, I am very impressed with CHPY. But first, we have to check out the distribution history and see if this thing's really worth it at a 40% yield. Like with all YieldMax ETFs, the distribution rate varies. It changes. Sometimes they pay out big, sometimes they don't. And why that is because of the option premiums. And that is all based off the implied volatility. Now, I'm not an expert on options. I'm working my way towards becoming an expert, I would say. And a lot of that is due to YouTube, due to X, due to just researching this stuff because it is really fun if it's a hobby of yours, like it is for me, obviously, with the channel. But it's complicated. So I'm not going to dive too far into it on the channel, but let's just talk about these distributions. We've seen 36 cents, 35, up to 62, which would have been a really high implied volatility week. And yes, it is, again, a weekly payer. And then back into the 30s, which is very, very solid. This is all going to be per share, by the way. All the way up until now where we have 42 cents was our last payment, and that was just last week. Now, I am using Seeking Alpha currently for the dividend history, and we can see their dividend yield trailing 12 months is 11.9%. If you don't know, trailing 12 months, it's factoring in the entire last year, which isn't going to work for a fund that started trading in April because we haven't had a year of trading history. So that's not accurate. It's going to be closer to what they said on their website, probably around 40%. But give me just a second and I'll calculate the yield for us. I know not everyone loves math, but I do really enjoy this part of the video, calculating the actual yield that we've seen. Now, one caveat, this is based off the current price. It's going to be a little bit skewed, but what I did was I took all of the 16 dividends or distributions we received so far, added them together to get the average. The average was about 39.6 cents. So we're getting just under 40 cents per week. Multiply that by 52 weeks in a year. We have a little over that, so we're averaging down ever so slightly, and that gives us $20.61 per year. Now we're going to divide this by the current price of 53.03 and then multiply that by 100, and that's going to give us a yield of 38.86%, which is amazing. This is what we're going to use in our $10,000 invested calculation, and I definitely think it's going to showcase the power of these ETFs when we use DRIP over a long period of time. Before we dive into our calculation, I wanted to show you guys that our DRIP calculator is working. So we have CHPY plugged in with dividends reinvested. Now, again, it hasn't been trading for a full year, so it is going to be skewed depending on how we see the rest of the year going. But we can see with 10K invested at inception, you would currently have $14,450, which is amazing. That is a total return of 44.50% and an annualized return of nearly 136.5%. That is crazy. Again, we are in a green market. So I love to see these numbers, but we are in a green market. It's really easy to look at these and go, wow, it's amazing, let me buy it. But then we see a market downturn, we see a sideways market, but this is still, I still want to showcase the power of CHPY and what we've seen it do so far. Is it going to continue? I don't know. Crazier things have happened, but I do think people should be keeping an eye on this one, and I definitely think it's underrated. If you don't believe me, watch this calculation where we put $10,000 into CHPY and track its progress over 10, 20, even 30 years to see if this can help us retire a millionaire. We do have some crazy news coming from the channel that I hope you guys are ready for, but I do want to say if you're interested in weekly payers, I have a cheat sheet that shows all of them, the days they pay and their trailing 12 months. It's available at spencerinvest.com with my dividend tracking spreadsheet. That one is a purchase, but the cheat sheet is free. So if you guys want it, it's free to download. But let's get into the video. So CHPY, everything's plugged in. We're using TipRank's dividend calculator. And we can see we have share price $53, number of shares 188.58. That's just over $10,000 invested. We have it plugged in for 1 year. Unfortunately, they only have the distribution frequency to being bi-monthly, not weekly. It's going to skew our data a little bit, but not too bad. It'll make more of an impact when we get to the 30 year, but I've already plugged in the 1 year and it's just crazy. So actually, okay, let me zoom in. Let me zoom in and make sure I don't block anything important, just yield on cost. All right, so what we can see is after 1 year, you would go from $10,000 to $14,703. And that's a pretty easy calculation because we have a near 40% yield. Again, this was calculated by me as we saw earlier. That's that yield that I pulled. Then we're going to bump it up. But still, this is amazing. Total dividends, we've made $4,700 in 1 year. But we're going to go to 5 years. And now, okay, I'll click calculate, but remember, this is all based off of a limited time trading, a couple of months. So is it going to do this? It's unlikely. Is it going to follow this exactly? No. Will it do better? It could. Is it going to do worse? More than likely, especially over a 5 year period. We're going to see a lot of ups and downs in the market. So don't forget that. Don't come back and say, hey, it didn't do this. I'm not predicting it. I'm just showcasing the power of drip with CHPY's current performance. And past performance is not indicative of future returns. Okay, after 5 years, your 10K is now worth $67,721. Our total dividend payments over this time period have been $58,700. Now going forward, our $70,000 is going to pay us $26,000 every single year. So yeah, you can really start making some money pretty quick here. And compounding is only going to continue that. After 10 years, your 10K is now worth $472,000. We've made $460K in dividends alone, and our annual income moving forward is $180,000. You could live off of that very easily. And in 10 years, I imagine $180K is going to be, hopefully, it's middle class. If it's below middle class, we're all in trouble, and doesn't matter what we invest in now anyways. But let's say inflation slows down. Let's say it's good and we can live off that. That would be amazing. 20 years. We're going to be millionaires. I'm just going to say it right now. Let's check. We are multi-millionaires. After 20 years, our 10K is worth $22,300,000. Wow. Total dividends are $22 million. Amazing. And our annual dividend income moving forward, $8,500,000. Now, again, if you can't live off 8.5 mil a year in 20 years, we're all in trouble. And if you haven't been investing, you're going to be in more trouble. But again, that's the power of compounding, the power of investments. So I like to say, I don't include annual contributions, right? It's our 10K flat and no dividend tax rate. And the reasoning behind that is depending on your income, your taxes can be different depending on how long you hold, yada, yada, yada. And also, it's an important factor. I invest in my Roth IRA primarily. So knowing that, 60, I'm retiring. CHPY, I put 10K in 30 years prior. Will I be able to live off of the distributions alone? Now, again, I don't recommend putting all your money into one specific fund, not financial advice, but how much can I have in retirement with this plan? Well, after holding it for 30 years, dripping all of my weekly dividends, I would be sitting with $1 billion, which might seem unrealistic now, but in 30 years, billionaires will likely be more common, or there'll be some trillionaires, no billionaires, and a lot of super poor people. Who knows? Over that period, I've gotten nearly $1 billion in dividends that was reinvested over and over and over again. And our annual dividend income is now sitting at $402 million, which I could probably live off $402 million. I'd have to cut back a little bit. I'm used to, 500 million currently, but it all depends. That was a joke if you can't tell. I am not rich by any means, but I am rich in knowledge because of all the help from you guys leaving good comments and everything, which I really do appreciate. You guys are amazing, and we just hit 25,000 subscribers, which blows my mind. If you like this video, I recommend checking out spencerinvest.com for some free stuff and watching these videos that are popping up on your screen right now, including our last video on ULTY and the YieldMax ETFs that have both been absolutely doing really, really well. So I appreciate you guys. Again, don't forget to like and subscribe, and I hope to see you in the next video.